Okay, good. And then let me bring up the file. Is there any questions before we get going? Okay, so then I'm going to go ahead and put us in tablet mode. Okay, it's so unnecessary for all that to happen. So I think I need to come back and just tell it to start the video again. Right, yeah, okay. You can hear me okay?
Yep.
Yep. Okay, good. All right, then let's go ahead and we're on chapter 10, and there were a few things that we had talked about last time. Remember in chapter 10, we're focusing on the government-wide financial statements, and government-wide statements are probably, of the 20 points that constitute government, the government-wide statements are probably, making up maybe less than 5 points of that. But there are some things that I want to cover with you, since we're putting in this extra time, that might be kind of confusing for you to figure out on your own. I'm not going through these because I think these will be particularly heavy, but because I can help you with a fairly limited investment of time here to get you to be comfortable with this. So what we're going to talk about is capitalization of the assets, and GASB 34 requires that at the government-wide level, we need to report capital assets, buildings, equipment, machinery that may be owned by the government entity. Now, even though those things, remember, under modified accrual are not reported at the fund level, at the government-wide level on the full accrual, we would report those, including something called infrastructure assets. Now, what's interesting is I've been talking about infrastructure assets for a long time in context of prepping for the CPA exam. And now infrastructure is something that is talked about all the time, and is something that President Biden was able to get approved here recently in terms of setting up so that the government will fund money to improve infrastructure assets. When we talk about infrastructure assets, we're talking about things like streets, bridges, those sort of things. And the big discussion has been is that the United States has not invested in infrastructure for some time, and this is an area where the federal government needs to weigh in and provide some funding. So what we're looking at here, though, is how we would account for assets that are called infrastructure assets. Again, infrastructure assets or bridges, streets, that sort of thing. Okay, so I want you to flashcard that. It's not buildings, it's not equipment. Infrastructure is streets, bridges, water systems, etc. Okay, now when you come over, they tell us that the required approach for infrastructure assets, they should be reported as a capital asset. And they tell us that the required approach is to all assets should be recorded and depreciated. But they have something called the modified approach. Okay, and under the modified approach, they tell us that infrastructure assets that are part of a network or subsystem, herefore referred to as eligible infrastructure assets, are not required to be depreciated, provided we meet two requirements. Okay, so you can flashcard that. Infrastructure assets do not need to be depreciated if we can meet two requirements. Now, when you think through this logically, you say, well, why would that be the case? Well, what happened was, prior to GASB 34, governments did not report infrastructure assets. That wasn't even required to put those on the balance sheet. GASB 34 comes along and said, hey, governments, prepare a set of government-wide statements and bring in infrastructure assets. Well, if you're a government like, city San Francisco, and the Golden Gate Bridge been out there since the 30s, Now all of a sudden you have to figure out how to value that and bring it on the balance sheet, and then to add complication, how to depreciate that. So in part of the comment process for GASB 34, GASB came down and said, okay, we still want you to capitalize infrastructure assets, but you don't have to depreciate them, but you have to meet these two requirements. And the two requirements is there has to be an asset management system that keeps track of your infrastructure assets. So you don't have to depreciate them, but you would have to have an asset management system. And then there would need to be documentation that shows that you are preserving your infrastructure assets at whatever condition assessment you're reporting them at. And the condition assessment is literally high, medium, low. Okay. Now, what I'm going to focus on here is not so much what are the requirements for the modified approach, but what is required to be disclosed if you use the modified approach. And they tell us that there will be two schedules that must be reported as required supplemental information. Now, just a quick review here of what required supplemental information is. Remember, we talked about the GASB 34 reporting model, and we said we'd have the MD&A, then we'd have the basic financial statements, which would include what? Both the government-wide and the fund financial statements. And remember, we talked about the reconciliation towards the end of class last time that would show how those two levels relate. That's a double-headed arrow going back and forth that represents the reconciliation. Okay. And then we would have what? We would have required supplemental information other than the MD&A. So the MD&A is also required supplemental information. Okay. So if you were choosing the modified approach, you'd have to provide these two schedules, and that would be a good example of something that is included in the RSI. And so what you need to provide under the modified approach is a schedule reporting the condition of the infrastructure assets. And guys, it'll say things like 10,000 miles of road in good condition, 20,000 miles of road in fair condition, 50,000 miles of road in poor condition. So even though a government may not be reporting the depreciation of their infrastructure assets, of course, you'd have to dig through to this RS&I that comes after the basic financial statements, but you would be able to see to what extent they have infrastructure assets that are maybe in poor condition. And then there would have to be a comparison schedule of the amount that is needed to maintain the condition assessment versus what's actually being spent. So if a government needed to spend, $10 million to maintain good condition, and they were only spending $3 million, well, they have a depreciating infrastructure, even though they're not reporting the depreciation on that. Okay, so go ahead and flashcard those. Again, I don't think that anyone's going to ask you anything heavy about the modified approach for infrastructure assets. I'm thinking that they would focus in, and okay, if you choose the modified approach, right, which means you don't have to depreciate the infrastructure assets, what would have to be reported? And in the RSI, you'd have to report those two schedules. Okay, any question? Okay, good. Just coming down, artwork and historical treasures. And if you're the city of Hayward and you have some sort of historical treasure that you're putting in the Hayward Museum, these beautiful pitchforks that were used to start up Hayward, would you have to put those assets on your balance sheet and on your statement of net position? And the answer is no, as long as you meet all three of the following conditions, which you can flashcard. The collection is held for public exhibition, it is kept unencumbered, and the city of Hayward in this example is subject to the policy that if it uses the if it sells the infrastructure assets, the works of art, If it sells, we wouldn't want them to sell their infrastructure assets. If anybody tries to buy you a bridge, sell you a bridge, don't buy it, right? But for works of art, if they sell that, then they have to use those proceeds to get other collection item work of art. So flashcard that 3 criteria, but I want to just give you a little tip there that that's the same thing that we said for not-for-profit organizations when we were looking at the not-for-profit stuff back a few chapters back. I guess in chapter, what was it, chapter 9 or 8, where we were looking at that information. Okay, question? Okay, good. Let's go ahead then, if there's nothing there. And that really tied out our discussion of the balance sheet, the government-wide balance sheet, which remember we call statement of net position. The income statement, you can go ahead and put L-I-K-E like I-S, the income statement, right? The government-wide statements. We talked about the statement of net position, which is like the balance sheet. Right now, we're going to talk about the statement of activities, which is like the income statement. Okay. Now, what I want to do is go through the example of the statement of activities that we have first, mark up that example, and then go back through the outline because I think it makes a little bit more sense when we do it that way. So what I want to do is jump us here to page 18. Okay, and on page 18, you see the statement of activities. Okay, and just to sort of review, not review, but see how this is constructed, the reporting structure, form, content of the statement of activities. Notice we have a functions approach. So functions, remember, are things that governments do, for example, public safety. And notice we broke this thing into governmental activities versus business type activities. What funds are included in governmental activities? Anybody remember?
The GRAS funds, those?
Good. The GRAS funds. So that's the general fund, the special revenue fund, the debt service fund, capital project fund, permanent fund, plus what?
Oh.
Plus the internal service fund.
Yes.
Okay. All right, good. That's governmental activities. How about business type activities? Okay, guys, this is kind of peanut butter and jelly stuff that you kind of just should have in your head now. I mean, it's not like this stuff is terribly complicated. Okay, so you know, if you think you're going to walk into the FAR exam not knowing, basic peanut butter and jelly, whipped cream, peanut butter, chocolate peanut butter pie stuff about governmental, rethink that. You really got to know this stuff, and this is not hard. Okay, so what goes into the business type activities is the enterprise fund. The what? Fiduciary funds are not reported, right, at the government-wide level. Okay, again, this is a common mistake. The reason I'm you guys are sitting here putting in extra time here to do this, I understand that. But I just want to make sure that that extra time pays off here. Common mistake is to underestimate the impact of governmental. So I just want to make sure that, I'm saying that here. Okay, good. So we come through, we have the functions and programs, things government does. For example, public safety, the government tries to keep you safe. And so we have what? We don't get very far. And this statement of activities at the government-wide level immediately tells you what this government spent on public safety. So this government spent $1,025,000 on public safety. Now, you come over and they start talking about program revenues. Program revenues are revenues that are generated by the various government programs. So when you look, you have charge for services, you can put an S there. You have operating grants, and you can put an O there. and you have capital grants, and you can put a C there, and that gives you the mnemonic SOC. And you're going to SOC these program revenues away, is the mnemonic, is the point of the mnemonic here, so that they help defray some of the cost of these programs. So when you look, this government was able to raise $78,000 of program revenues that helped pay for public safety. Now, it's a little annoying because if you dig down and you look a little bit more at what goes into the charge for services, for example, tickets, speeding tickets would be part of your charge for services. And I don't know about you, when I get a ticket from the cop, I don't seem to say, well, thank you for your service today. But those are the kinds of program revenues that would help defray the cost of this public safety program, right? Now, when you come over and notice we have both governmental activities and business type activities showing up here. But when you come over to the governmental activity column, notice we have reported in this example, public safety net of any program revenue. So what did you spend? What revenue did you raise through these programs? And then what is the net expense of those? So we have 982,000 in this example of net program expenses for public safety. Now, when you come down, you notice that every single one of this government's programs loses money. You're thinking, what a loser. How do we run this government? And the answer is that we run this government through what? Through taxes, okay? And so when you come down to the very end here, notice that we have a change in net position. Change in net position is like net income. Change in net position is like net income, and they had 794,500. One time I taught this class, and the guy stood up and said, the government has to give the people a refund for that money, right? And I'm just like, okay, look, go talk to Trump or somebody. I'm not here to explain anything political to you. I'm just telling you, 794,500 is what this government had left over. It's like net income, okay? Now, that shows you the structure of this, statement of activities. But if you want to think about it in terms of big picture, it is sort of like an upside down income statement in which the expenses are at the top and the major source of revenue are at the bottom, right? Okay. Now go ahead and flashcard the mnemonic and the categories of program revenue that we just looked at: charge for service, operating grants, and capital grants. Okay. Okay. Question?
Yeah.
Huh?
I was looking at the that public safety, 1,025,000 in revenue, 78,000 in charge of services, which is basically their money to cover that. That 982 is not just a subtraction of those two prior numbers, is it?
No, I didn't talk about the allocation of the indirect expense.
There you go.
So if you took the 1,025,000 plus 35 minus 78, you'd get the 982.
Got you. Missed that somehow.
Yeah, I just kind of skipped that. I think that's a little bit more detailed than we need, but Tom is very thorough when he puts this stuff together. So, okay, good. Now, what I want to come back now is to the outline, because I just find that it's a little bit easier to focus on the outline once you kind of have a visual in your mind. So let's just look at functions and programs, okay? And we have the different programs, and we were using, let's just kind of remind ourselves, we use public safety, right, as our program. Okay. And we saw what? We saw governmental activities. We saw what? Business type activities. And I didn't point out the component units. Let me go back just to anal about this, but we also had component units over here, right? Okay. Now, that was what we saw there. We saw the programs, we saw public safety, and we saw them for the different, different programs. We saw, the first thing we saw were the expenses. And that was 1 million, what was it, Matthew? 1,025,000?
Yes.
Just remember the dollar amount for the expenses for public safety. Then we saw program revenue. And when we look at program revenue, they could be exchange, they could be non-exchange. Okay. So let's go back. And sorry guys, I kind of forgot to put something in here. We have operating grants and capital grants. Charge for services are exchange revenue. Okay, that's exchange revenue. Charge for service is an exchange revenue because you pay a fee. I don't know, you pay, let's get away from, speeding tickets because it's not the most obvious, but let's say you want to have a parade, you want to have a public assembly. And the police say, okay, we'll give you a permit for that, but you're going to have to pay a fee for that. And you're going to have to pay for a certain amount of police coverage for that thing. Well, that's an exchange that you pay the fee for the permit for the gathering, you get the police coverage and you get the permit. And so that's considered exchange because it's a, tit for tat, you give the pay, they give you the permit, right? Operating grants and capital grants, okay? And just to kind of give you an example of what an operating grant would be, there's a program that the federal government has called the COPS program, in which the federal government gives money to state and local governments to pay for police salaries, to pay for police uniforms. That's operating grant. It was something that was put into place by the Clinton administration. And then capital grants, they literally would give them money to pay for police cars, even drones. And during the George Floyd protests, one of the things that was being talked about there was they kept saying, well, defund the police. And what sort of was being talked about there is, well, maybe what we need to do is look at what we're providing the police, so more of a line item approach. So is it really necessary for the federal government to be handing money down to state and local police departments to buy tanks and these kind of things, because it's really feeding more into the industrial war complex than it is, trying to keep, help public safety. So you could have operating grants and capital grants, and these typically fall into the mandated and voluntary non-exchange. Non-exchange in meaning that, this money is just being handed down to this city. Of course, they didn't get any in this example, but it's money that would be being handed down to this township, probably from the federal government, gives a lot of that kind of money. So when you come back now to the outline, I'm sorry, I keep going back and forth here. You saw exchange and non-exchange for our program revenue. Exchange is the charge for service. The non-exchange are going to be those operating and capital grants. So you come over, we have charge for services, those are exchange. And then we have operating grants, you have the mandatory and voluntary non-exchange, capital grants, mandatory and voluntary non-exchange. And I've already asked you to make the flashcard as to the nature of the program revenue, charge for service, operating grants, capital grants, and there's no need to get into that much detail there in terms of, whether they're exchange or non-exchange. I guess you could flashcard that if you want. Why not? Go ahead and flashcard that information there. Won't hurt you. Make an extra flashcard. Okay. Then we report the net expenses, and that was a net of the expenses, both direct and indirect, minus what was the charge for service amount? Was 78,000, right? Is what we saw there. Okay, good. Then we had general revenues, and the general revenues were at the bottom, and you can just go ahead and put down general revenue is mostly taxes. Okay, we saw those different taxes. And then we saw the change in net position. Change in net position was like net income, and that number was 794,500. Right? Okay, good. And then just a reminder that the internal service fund activity would be part of the governmental activities column, which we already knew that. Question? Okay, good. So that takes us through the statement of activities. So let's go ahead and let's take a look at a couple questions. And let's see which machine is in control today. Looks like it's this one, which is good. Oh, sorry, guys. I didn't realize I still had my news on my TV. Let me turn that down. I'm sure that's pretty distracting.
I hadn't actually heard it at all. I couldn't hear the news at all.
I've got the news is on 24 hours, 7 days a week around here. But I don't know why, because it irritates me. But I'm going to go ahead and turn that down. I think it's some kind of superstition on my part to sit here and listen to the news. Like as long as I monitor the news, nothing bad will happen. I'll give you a little bit more time with this one. This question, you got to calculate two numbers. So. Okay, let's go ahead. I'm going to end the poll. Let's take a look at this one. And okay, we're about half of us got it right. The answer here is A. Okay, but let's just go through this one together. Okay. So about half of us, let me share the results, about half of us got it right. Okay. All right, good. So let's just go ahead and let's take a look at this. And we've got on March 1st, WAG City issued $1 million, 10-year, 6% general obligation bond at par with no bond issue cost. The bond pays interest September 1st and March 1st. What amount of interest expense and bond interest payable should WAG report? And guys, I saw that a few of you chose 0. You got to know where you're looking. If you're at the government-wide financial statements, what kind of accounting are you using? Full accrual or modified accrual?
Full accrual.
Full accrual if you're at the government-wide level, right? So once you realize that, you should pray for a question like this on the exam, because it's no different than what you would do if you were dealing with bonds for a for-profit entity, right? In which we have to take what? We have to take the million, and they issued the bonds on what? On March 1st. So if they issue the bonds on March 1st, that's what? And you really should count on your fingers for questions like this. March, April, May, June, July, August, September, October, November. Now I got myself lost. March, April, May, June, July, August, September, October, November, December. That's what? That's 10 months, right? Okay, so you would go ahead and take the million times the what? Times the 0.06 times 10/12. And when you do the calculation on that, that gives you what? That gives you 50,000. So you know, huh?
I just said, yeah.
Oh, okay, so you know right out of the gate what C and D are wrong. It takes you about 30 seconds to figure that out. Okay, so now you got this down to 50-50. And since we're using what? Full accrual accounting, you would have to calculate the interest payable at the end of the year. So there's no way it could be zero because these bonds are going to what? We're outstanding from the last interest payment day of, in this case, it would have been what? Would have been September 1st. So there would have been interest that would have had to be accrued between September 1st and December 31st. But just to go ahead and figure that out to make for sure that A is correct, a million times what? 0.06. And if they last paid interest on September 1st, that means we have to accrue interest for September, October, November, December, 4 months. So you go ahead and you multiply that times the what? 4 12s, and yeah, that gives me the 20,000. But you knew it had to be some amount greater than zero. So you could probably save a couple seconds there if you were pushed for time here on your exam to just go ahead and know that A is the right answer after you got the first one, after you got the interest expense. Question. Okay, good. Let's go ahead and let's look at this question 2 then. Okay, guys, let's go ahead and take a shot at this one now. And let's go ahead and end the poll and share the results. And we got a decent outcome on this one, and that the answer is C. So we got 60% of the class getting that one right. But again, let's go through this one together, okay? And now when you look at this, they give us information about when this money is going to be collected and whatnot. They tell us that it's 2 million, 1% is uncollectible, and then they ask government-wide. Now, if it's government-wide, we're using what? Full accrual accounting rules, but for revenue recognition, remember we say, well, look, we reduce the revenue even under full accrual accounting by the amount we think we're not going to collect. So just to, review the journal entry that we had talked about, there would be taxes receivable of 2 million. There would be what? There would be an allowance, and the allowance is going to be that 1% of the 2 million, which by my math is what, 20,000? And then there's going to be revenue. You report that net of the 1,980,000. We're lining my numbers up very well here, but that's where you would come up with the correct answer. Or, the way I did it when I realized, hey, this is government-wide, 2 million times what? 0.99 will give you the 1,980,000. Now, let's say they ask me the same question for the general fund. Okay, well, if it's a general fund, I got to use what? I got to use modified accrual accounting, and then I would have to what? Limit myself to report amounts that were collected within 60 days, right? So prior year taxes collected within 60 days of the current year, well, that's going to be what? That would be prior year money, because if I collect that in the first 60 days of, say, 2021, well, that money, January, February, we'll just say 2021, that money should have been reported as revenue for what? 2020, right? Then you come in and they say prior year taxes collected between 60 and 90 days of the current year. Well, now I would go ahead and I would pick that up, because now these are amounts that I'm collecting, even though it was money that was attributable to 2020 activity, because that money fell out more than 60 days outside of 2020, that money gets counted in 2021. So I'd pick up that 120,000. Current year taxes collected in the current year, yeah, I'll pick that up, 1,800,000. Obviously, that's within 60 days. If I collected it during the year, so I'm not even worried about the 60 days. Current year taxes collected within the first 60 days of the subsequent year. So now that's money in this example being collected in 2022. But because it's within 60 days of the year end of 2021, then I'm going to go ahead and I'm going to pick up that 80,000. And when I do the math on that, what do I get? 2 million? Okay. So had this said, hey, for the general fund, then I would have had to pay attention to when this money was collected. But since they said government-wide, I don't give a rat's when they collect it. That is not what we do for revenue recognition in government at the government-wide level using full accrual. It's when we get into the collection sequence, when you're dealing with the fund financial statements under modified accrual. Question? Okay, good. Let's come over and let's look at the next one. Oh, sorry. They always got to ask me one more question. Okay, guys, I'm going to go ahead and end the poll, and let's see what we've got here. By the way, I'm noticing of the 6 people in the class, we're getting like 4 that are participating. If you're not going to do the class, guys, just log off, please, because I don't, you know, we can probably save some time here that I don't have to sit here and wait for someone that's maybe working the question, you know, supposedly working the question that's not bothering to pay attention. So, you know, if you're not going to do the class, just log off. Okay.
One
Okay,
of those was
good.
me. I just had like a wheezing dog I was dealing with, but yeah,
Okay.
my bad. I'm here
Okay.
still.
No, that's all right. I just, because I wait to see that I get a full response, and then we wait, and then the person never weighs in. I'm like, well, we probably could have answered this like a minute ago. But anyway, okay, good. So looks like most of us got this right. You can see, you know, 75% got it right, which is pretty good. But let's just look at this one. And this is basically saying, do you understand what goes into the business type activities, which is what they're asking us for, versus governmental activities, right? And remember, governmental activities, okay, as we've seen, are going to be the GRASP, it's for GRSPP, plus the Internal Service Fund. Enter business type activities. The subject of this question are the enterprise funds, and then fiduciary funds are not reported. Okay, so they want to ask what should be reported under business type activity on the statement of activities, and they tell us that the city reported $9,000 increase in the net position of the motor pool internal service fund. Well, I'm going to ignore that because the internal service fund goes where? Goes governmental activities. And then they tell us the Water Enterprise Fund had a $12,000 increase, I should say, in the Enterprise Fund. Well, that does go under business type activities, and I don't have to make any adjustments to flip from modified accrual to full accrual because I use full accrual for the Enterprise Fund. I use full accrual at the government-wide level, so I just know I can pick that number up. And then they talk about 7,000 for the pension. Well, pension is one of my what? One of my fiduciary funds, which are not reported at the government-wide level. So the answer, which most of us got right, is 12,000. That's what I'm saying, guys. Very straightforward concepts that aren't hard to remember, aren't hard to understand, that yield step by step, drop by drop, these 20 points that constitute government accounting. Do not squander the opportunity to get those 20 points with a fair amount of efficiency in terms of your time and a high level of accuracy in terms of your point values. Okay, good. Come over and let's take a look at our and we start going through the fund financial statements. And guys, I'm not going to spend time going through the fund financial statements here because we spent quite a bit of time with that when we were looking at the funds in our earlier chapters for chapter 9. So we looked at the governmental funds, we looked at the proprietary funds. Okay, we have our business type activities constituting our enterprise funds, right? And then the internal service fund is another proprietary fund, which we know we report under governmental activities. And remember, we did that whole little exercise where we sat there and we were able to see that 1,835,000 getting reported to government-wide level. We were doing that sort of annoying flipping back and forth to different pages. When we looked at our proprietary funds in our in our earlier chapters, we talked about it being constructed in a manner that's consistent with commercial accounting, having operating and non-operating items, right? And then remember, we had said that the change in net position is like net income. And you kind of have a little like a version of a statement of retained earnings down here where you add the beginning net position, add that to the change in net position, that yields you the ending, which we already saw on the balance sheet was 1,835,000. Now, statement of cash flows is only prepared by the proprietary funds. None of the other funds prepare a statement of cash flows. There is no government-wide statement of cash flows. Now, what I'm going to do before we get into the statement of cash flows for government, I'm going to go over into the final review material that we're going to be covering here tonight. And I'm going to jump into the statement of cash flows discussion because we have seen statement of cash flows for government now. We've seen it for not-for-profit, and you're going to see it because it's one of the basic financial statements that have to be prepared by all entities. Now we're seeing the statement of cash flows, and so I can promise you, you're probably going to get about 10 points worth of statement of cash flow related questions on the exam. So I want to review that with you here as part of our final review discussion. I'll come back to chapter 10 and show you, what we're saying in the chapter 10 about the government version of the statement of cash flows. But I think this is a good time to go ahead and stop and take a look at the final review. Do you need some time to find this book?
Yes.
Okay. Why don't we go ahead and take a quick 5-minute break? We'll come back at 6 o'clock so that you can get this. I'm showing about 5 till, so we'll kind of squeeze in a little break here so you can find that. So it's about 5 minutes. We'll come back at 6 o'clock. I guess I'll pause the recording. Okay, guys, let's go ahead and let's jump in to the final review material for the statement of cash flows. I'm going to put this in full screen here. And let's just spend some time with this. Again, I'm thinking 10 points, statement of cash flow stuff on the exam, very common, okay? And there are 2 methods that you can use. One is the direct, the other is the indirect method. Most companies use the indirect method, so that tends to be the heavier one that gets tested on the exam. But you could see 1 or 2 multiple choice questions that deal with the direct method. So we're going to sort of spend some time looking at both methods here. We're going to see that for government, when we get back to that, they are required to use the direct method. But corporations, for-profit entities have the choice of using indirect or direct. And I should also mention again that not-for-profit entities have the choice of using direct or indirect. Government entities, we'll see, must use the direct method, okay? But let's just go ahead and let's first take a look at investing activities and financing activities. And I want you to think of your investing activities as an investing department. Let's say you're running a corporation and you have a department that you have called your investing department. What would you ask them to do?
buy equipment, machinery.
Make investments, right? Yeah, invest in machinery, equipment, right, Don? Maybe invest in stocks and bonds of other companies, right?
Yeah.
Okay, good. How about your financing activities? Think of that as your investing department. What would you ask them to do?
Wait, financing is investing as well?
I mean, well, obviously not. I wrote the wrong thing. Financing department,
Oh, yeah,
sorry.
debt.
Thank you. Okay, what would you expect your financing department to do?
Source
Raise fund.
Huh?
funding,
Do what?
like source funding through debt or,
Get me financing.
mhm.
Get me money to do the things I want to do. So borrow money, issue stocks, right? Okay, good. All right, good. So you got your investing and your financing department. Now, operating activity, okay? And let's just look at operating activity. And first, we're going to look at it for the indirect method, and then we're going to talk a little bit about it for the direct. We don't have to separate out the discussion for in the investing and the financing, because this is exactly the same. If you looked at a statement of cash flows for a company prepared under direct versus indirect, the only difference would be how the operating activities section looks. The financing and the investing section and the supplemental disclosures would be identical for the two methods. Okay. Now, the way to look at the operating section, okay, is to start with net income. I'm talking about under the indirect method. And convert to cash provided by operations. Okay, so you're going to pick up whatever the net income is, and then you will go ahead and reconcile it to cash provided by operating activities. And maybe I didn't need to write that there because it was right there. Okay, now I'm going to give you the mnemonic that is very helpful here, in my opinion, which is CLAD. Okay, and CLAD means you're going to look at current items. Current items. You're going to look at current assets, current liabilities, okay? Accounts payable, accounts receivable, inventory, etc., right? Current assets, current items, okay? That's the first part of CLAD. Then you're going to look at losses and gains, and you're going to make adjustments for those losses and gains. It says losses and gains. Then you're going to look at amortization and depreciation. I don't know why I'm doing this. If you're thinking to yourself, why is he doing this? Why is he going all the way down to write out the whole word depreciation? My answer is I don't know. And then we're going to look at deferred items. Let's stick with this stupid thing that I'm doing where it's spilling over to the next page. Okay. Now, current items, and let's just write in a couple of additional tips in there for current items. Current items, assets do the opposite. Liabilities do the same. What does that mean? If an asset increases, subtract it from net income. If an asset does what? If it decreases, add it to net income. Liabilities do the same. The liability increases, add it. If it decreases, subtract it, do the same. Okay. Losses, you should subtract. Again, we're talking about what you do to net income, right? Because you start with net income and then you make these adjustments. And you remember in CLAD is the adjustments you need to deal with. And I'm just telling you what to do with each one of these. For losses, subtract. For gains, okay, I've got that backwards, guys, I'm sorry. For losses, add them to net income. For gains, subtract. Okay, amortization, depreciation. Depreciation is the easiest one in the world. Always add depreciation. Okay, for amortization, okay, and I'm going to have to squeeze that over here. If it is a premium, you should add premium amortization, and we'll talk about bonds tonight as well. Add premium amortization, subtract discount amortization. Okay, and then for deferred items, basically follow your CLAD rules. Deferred items, deferred liabilities, you're pretty much going to do for the liabilities, you'll do the same. If the deferred item increase, you'll go ahead and add it. If it decreased, you subtract it. Okay, so I think you know much of this, but I would make a flashcard that helps you to remember the nature of things that go into that operating section. Making a note maybe of this one might be a little bit tricky for you. If you get a statement of cash flows as a task-based simulation, this is a good way of making sure you're going through the problem and picking up all the little different things that you need to be able to get the points for the operating activity section. Question? Okay, good. With that, let's go ahead then and let's take a look at the next page, which gives us an example of what the indirect method looks like. Notice they do what? They start with net income, and then they go ahead and they follow our CLAD rules there to come up with the net cash provided by operating activities, investing, financing, our investing and financing departments. And then you come down and they give us what? The net increase in cash and cash equivalents. You add whatever the beginning balance is of the cash, and that should tie to the ending balance of cash reported on the balance sheet. Now, let me ask you a question. The exam gives you comparative financial statements. So you know what the beginning cash is, you know what the ending cash is. You prepare a statement of cash flow as a part of a task-based simulation, and when you address the change in cash, subtracting a decrease in cash or adding an increase in cash, it doesn't tie to what you know to be the ending balance of cash because they gave you the ending balance when they gave you comparative balance sheet. What would you do?
Cash flow has to be incorrect then, right?
Right. So what would you do? You're on the exam. I'm not talking about what would you do at work. If you were at work, you'd sit there and you'd go, okay, shit.
I'd figure it out. I have time.
Huh?
I said I'd figure it out. I have time. I'm not giving that here. I would probably just figure out, I don't know, what I'm off by and try to see what I'm missing.
I would strongly suggest that you let it go.
Okay.
You stop at that point and move on to the next task-based simulation or whatever it is. This is a trick that folks fall into in the exam because the accountant you would say, well, I know that's not right. I got to fix this, because if you turned it in that way at work, they'd call you in and ask you if everything was okay. Whereas for the exam, you're getting points as you move through this thing. And that's making that thing tie out perfectly is not, such a valuable point that you should sit there and waste time. Now, having said that, you know, you can, if you have time, go back, assuming you haven't left that particular testlet. You can go back if you want to, but I would highly recommend that you move on to somewhere else because there's a whole new set of points for you sitting there in that next, you know, task that they're having you do, right? Okay. Okay, good. All right, so that's the way the statement of cash flows works, but let's just go ahead and let's try a couple questions. And remember, guys, this is part of the final review process, so we're spending a little bit more time together. You know, did I start the recording up again?
I was gonna ask you that
Yeah,
too.
the button says recording, so I think we're good.
I think you did.
Yeah, okay. Okay, I don't know why. Oh, yeah.
Yeah,
see it.
I just joined and it asked me, it made that thing and said, I had to click to get in. I had to click the recording button to be able to get in. So yeah, you're
Yeah.
recording.
And I see it now. I guess for some reason it's not showing. Oh yeah, it's showing right there too. Okay. Okay, good. We're recording. Okay, good, guys. Let's go ahead and let's try this one. And remember, you're saying, well, geez, we didn't talk much about it. And you're already throwing a problem on us. But remember, we're sort of in final review stage here. So, and just, you know, A can be 1, B can be 2, and so on. And on the exam, don't forget, guys, it's not A, B, C, D. It's just a little radio dial that you that you click on, just like we do in our homework. But let's go ahead and take a look at this one. This is a good question. I'm giving you a little more time, guys. I know this question's, there's 2 aspects to this question. It looks like most of you had a chance to try it. So let's go ahead and end the poll and then work this together. And most of you got it right. That's a pretty good percentage, really, for a question. It's a little bit tough. Okay, but let's just go ahead and let's take a look at this. And first of all, a question like this is kind of like dropping a bowl of hot soup on your lap, in which first you got to just kind of do the thing, and then you've got to, you know, kind of calm down and start to work through the problem. Okay, so when you look at this, they're asking me what was the depreciation charge to operations. Now you're looking and saying, well, John, what the hell does this have to do with statement of cash flows? Well, remember, we have what? We have the A in CLAD, and one of the things we'd have to do is add back depreciation. And if you were doing this, say, as one of your task-based simulations, they may give you this information and not tell you the depreciation expense, expecting as part of your task-based simulation for you to do a side calculation there to figure out what the depreciation expense is for the period. Now you look at that and say, well, in practice, I'd never have to do that because I would first prepare my balance sheet, then my income statement. I'd know the depreciation to get to a statement of cash flow. Well, examiners are God and they can mess with us that way. So there's nothing we can do about it. We're going to have to figure out the depreciation. So what we would do is say, well, wait a minute. We have the what? We have the tool that we use here in preparing for the CPA exam of BASE. And so what I'm going to do is I'm going to analyze the accumulated depreciation account. I know that what? I know that depreciation expense is added to accumulated depreciation, right? You debit depreciation expense, you credit the accumulated depreciation. So if I look at it this way, now I just need to pick up some numbers here, and they tell me that what? Accumulated depreciation had 800,000 at the end of year 2 here, and it had what? 600,000 at the beginning of year 2, which is the same as the end of year 1. So I'm analyzing year 2, just to make sure I know what year I'm analyzing. And the beginning was what? Was 600,000, excuse me. Beginning was 600,000 for year 2, right? And year 1 was 600,000. So that's the beginning. Year 2, the ending is 800,000. So I know that right out of the gate, right? Then they tell me that property with a cost of 50,000 and a carrying amount of 40,000 was sold. Well, if that's the case, what did I do? When I sold that property, I would take away the accumulated depreciation, wouldn't I? So that's a subtract from the accumulated depreciation. The accumulated depreciation on that is if it cost 50 and it had a book value of 40, the accumulated depreciation associated with that thing must be what? 10,000, which is a subtract. Now, when I use the base mnemonic, I always help myself by putting a little subtotal in there so that I don't add or subtract the wrong way. So if I'm sitting there and I ended up with 800,000 and I subtracted 10,000, then I must have had what? 810,000 sitting there before I could subtract the 10,000 to end up with the 8. Well, if I started with 6 and I got up as high as 810 before I subtracted the 10, then that means I must have added what? $210,000 to the accumulated depreciation account, which is my depreciation expense. Then I would take that number if I was doing this as a take-back task-based simulation, and of course I'd add that to my net income. So sometimes the exam questions won't give you the depreciation. You're going to have to do, well, this obvious statement cash flows, but if it was, say, a task-based simulation, you most likely would have to go ahead and work through to calculate the depreciation expense. They're probably not just going to give it to you because they know that's too easy. Question? Okay, good. Come over and let's look at the direct method. Okay, now when you're dealing with the direct method, okay, I want to point you to a first to the different things that could constitute the operating activity section. Remember, investing and financing will be the same, and I don't know what a dividend is. Looks like they got a little typo there. They need to put in a dividend, but make sure that you're comfortable with the categories of the nature of things that go into the operating section. Now look, both direct and indirect, the cash provided by operations is going to be the same number. It's just how we display that information under the operating. Under the direct method, I should say, we don't start with net income and reconcile. We simply give you the cash in each one of these categories, the cash provided or used in each one of these categories. Note that you would still have to do the reconciliation of net income to cash provided by operations you'd still have to do the indirect method operating section as part of the overall presentation under the direct method. So even though you don't just have that as on the face of the statement of cash flows, you would have to disclose what the reconciliation net income is to cash provided by operations, even if you use the indirect method. I mean, even if you use the direct method, excuse me. Now, when you look at some of the material I provided, and I think this is, no, where was that? I want to show you where this is. I think it was chapter, I want to say chapter 2, just to make sure I'm saying it right. See this thing? Cash to accrual, accrual to cash. See this flashcard? Okay, we had this back when we were looking before, and when we looked, and I'm just going to open it from here. I had cash to accrual, but we're now in what? Accrual to cash. Okay, start with net income, and I kind of given you the same thing I had you write down in the book for the statement of cash flows, because sometimes in chapter 2 the questions were just asking, here was the accrual, what would have been the net income under the cash method, which is the same thing of what we're doing on the statement of cash flows. We're going from accrual net income to cash net income. And then down here, I said, if the problem is asking about revenue, because they may say cash to accrual or accrual to cash, follow the above rules, analyzing related accounts such as account receivable, unearned revenue, cash. That's that's getting more to those questions where they maybe gave you the accrual revenue, they want you to give the cash revenue. If the problem is asking about expenses, reverse the above rules. And this is the main thing that I wanted to point out here, because you think about it, what? Expenses reduce net income, don't they? So I can't use the same rule that I use for net income. I have to flip those rules. So I would do the opposite. So that means that what? For assets, I'll do the same. For liabilities, I'll do the opposite. Okay. Now, when you think of expenses, and sometimes I have to explain this to my introductory to accounting students, they'll be like, well, what is cost of goods sold? Is it an expense? And I'm like, well, it's like an expense because it reduces net income. We don't call it an expense, we call it cost of goods sold. It's a nerdy accounting thing, because what? When you sell something to somebody, it still has future economic benefit for them. So we don't want to call it an expense. So we call it a cost. But cost of goods sold has the same effect on net income. It reduces it. So cost of goods sold should be thought of as an expense. Okay. So with that as a quick review, let's try this question. Okay, guys, let's go ahead and let's take a look at this one. And again, the way you would have done this is to follow that, basically that flashcard that I talked about. And we said that for expenses, you should reverse the rules that we've talked about for calculating the net income. So let's just take a look at this one. And they tell me that they started with cost of goods sold of 450,000. They give me information about these current items, inventory and accounts payable. And then they want me to talk about the cash paid to suppliers. Okay, so what happens? Well, I know I have to start with that 450,000, which is an accrual number, cost of goods sold, and I want to turn it in to a cash number. And I see that inventory did what? Inventory decreased 160,000. Inventory is an asset. And even though we say when we're dealing with net income for assets, we should do the opposite. When we're dealing with expenses and trying to turn that into a cash item, then we do the what? We do the same. So since the inventory decreased 160,000, we have to go ahead and subtract it. We do the same, right? Then they tell us that what? The accounts payable, the liability decreased. Well, since it's an expense, I turn my CLAD rules, I do the mirror image. So since it decreased, I do the opposite. I add it, the 40,000. And when I do that, I get what? I get the correct answer, 330,000. Okay, so you've got the flashcards there on how to handle these items. I don't think you get a lot of direct method questions. You get maybe one or two, and you just have to be careful. The rules work the way we've said for CLAD, for your revenue, for your net income. When they start asking you about expenses and things like cost of goods sold, which is like an expense, then you have to flip the CLAD rules over. Okay. Okay, good. Let's go ahead then and look and notice, guys, that for the direct method, which this is the example. Oh, by the way, they say this is the preferred presentation. FASB tells companies, we want you to use the direct method, and all the companies sit here and go, here, we're going to use the indirect method. So most companies, 95% of them, whatever, use the indirect method. I'm of the opinion that FASB should get rid of the indirect method and just use the direct method, but they don't ask me that question. Companies don't like to, they don't consult me on that kind of stuff. FASB doesn't. Companies don't like to use the direct method because they don't want to tell their competitors how much cash they receive from customers. Okay, and it's more work to come up with those numbers. So they decide to use the indirect method. But even if you use the indirect method, notice, guys, you still have what? You still have to provide a reconciliation down here of net income to cash provided by operations. So notice the number is the same, though. It's just how the information is being presented. Okay. Okay, good. Now you come over, you have your investing activities, which you've already said. When you're dealing with your investing activities, it's going to be what? It's going to be purchase or sale of property, plant, and equipment, marketable securities, etc. I think it's best for you to think of this as your investing department. Okay, so let's just go ahead and let's take a look at this question. I'm going to give you a little time on this one because I know that it's a little involved because you got those two columns of numbers you got to figure out here. And so just keep that visual in mind of the investing department as you go through this. Okay, you guys having trouble with this one? Okay, I'm gonna go ahead and end the poll. Again, if you don't wanna do these questions, I would suggest you kind of log off and then just watch the video later, because I'm kind of sitting here waiting for folks to try the question. And then it's 3 minutes in and we still haven't tried it. I'm just kind of like, well, we could have moved on probably. So anyway, okay, but let's go ahead. Let's take a look at this one. And most of us got it right, okay, which is great. So let's just take a look at this. And you look and they want to know, well, what should go in the investing section? And then they ask for the depreciation adjustment in the operating section. So you'd have to read carefully to know what they're asking you for here, right? Because you could easily think they're asking you for the cash provided by operations if you didn't read carefully and see, no, they're just asking me for the depreciation part, the what? The A in CLAD, right? Amortization, depreciation, okay? But if I'm working this question on the exam, I'm thinking, okay, I'm gonna do what goes in the investing section first. So they tell me they purchased fixed asset for 50,000 and sold fixed asset with an original cost of 18 and a book value of 6 for 10,000. Cool Tools made no other long-term asset purchase or sale. Okay, once I see that, if they spent 50,000, but they brought 10,000 in from the sale of that equipment, then the cash that is going to be used for investing activity is 40,000. Okay, so I quickly do what? I quickly get rid of 1 and 2, A and B, whatever, based on that quick analysis. Now, you don't need this for the purposes of answering this question, but I figure, hey, since we're doing sort of a review here anyway, let's just look at the journal entry on this. There's what? There's a $10,000 cash that comes in for the sale of this equipment. We have what? We had accumulated depreciation, and they tell me that it had a book value of 8, original cost of 18, and a book value of 6. That means the accumulated depreciation on that thing is what? Is 12,000. Then what? Then I'm going to go ahead and, of course, if I'm getting rid of equipment, I would credit the equipment for 18,000, and there's a gain there of what? Of 4,000. That gain is the difference between the book value of 6 and the what? 10,000 that I sold it for. Okay. Now that that $4,000 gain, that would be what? I would take that gain and I would subtract that from net income, right? I would subtract that from net income to get to my cash provided by operations, had the question asked me that, right? But they didn't ask me that in this question. So that's why I'm saying this is not necessary, but I just felt, God damn it. But I just felt it was worth it to put that there until it disappeared. Okay. All right, good. Now you come over. I'm not going to rewrite it. I don't know why it disappeared. Now you come over and let's just see how to get that depreciation number. And it's just like we did before, in that they give me that table up there. Okay. And we had what? We had accumulated depreciation that had a beginning balance of what? 41,000. We had down here an ending balance of what? 53,000. We're going to add the depreciation, which is what this question is asking me, and we will subtract what? The accumulated depreciation for the equipment that was sold, and the accumulated depreciation for the equipment that was sold, we saw a minute ago, was what? 12,000, the 18 minus the book value of 6. And then I like to do subtotals on these questions. It just helps me to make sure I'm keeping the numbers going in the right direction, guys, because it's easy to do the wrong way, and the examiners sit there and they wait. They know that you might make that mistake, and they will put a choice in there you know, constitutes that choice. But that means that subtotal was what? 65,000. So I had gotten up to 65 before I subtracted the 12 to get down to 53. That means that I added what? I added 24,000. The answer to this question is the 24,000 that was the depreciation. Okay, so that now makes me clearly see that choice 4D, whatever, the D position is the right answer. Question. I think you're starting to see, guys, we are in the what? We are now in the stage where you're starting to work on how you're going to be systematic in answering these questions. We're kind of beyond the, well, what's the theory now? We're more into how will you systematically get through these questions? You've got to start to develop that part of your, you know, muscle tissue, if you will, because that is where you start to have the appropriate time considerations as you go through, because time is an important factor, particularly for the FAR exam. So you have to work on your system as much as anything. Okay. Okay, good. Then what? Then you come over and we have our financing activities. And again, we want to think of what as our financing. So it involves what? Payments of retirement of long-term notes, long-term bonds, issuance of company stock, and dividends paid. Be careful. Dividends received go where? Go in the operating section. Okay, and it's a pain in the ass. It goes in the operating section for no other reason than the fact that we started with net income, and net income is partly affected by gains on what? On sale of securities. So to get to cash provided by operations, they have to put interest items, interest received, interest paid in the operating, and dividends received in the operating. Dividends paid, because dividends paid don't affect net income, that can properly go down into the financing section, but it's dysfunctional the way they're asking us, the FASB is asking us to do this, but you just remember that and you're in good shape on the exam. Interest paid, interest received, operating, dividends received, operating, dividends paid, financing. Okay, all right, so with all that, let's go ahead and let's look at this question. Okay, guys, let's go ahead and let's take a look at this one. I'm giving you a little more time with some of these because there are a little bit more moving parts associated with them. But okay, yeah, most of us got it right. But let's go ahead and the answer here is choice A, number one. But let's go ahead and let's just take a look at this one. And again, financing. So it's my financing department. They're getting me finance. They're issuing debt. They're repaying the debt, etc. Right? So we have this we have this payment for the retirement of long-term bonds. When you retire long-term bonds, that's what your financing department does. So that's going to be subtract 750. And quite frankly, you can't get there without knowing that that's a subtract. There's no way to get any of these choices, right? Then they talk about distribution of year one cash dividend declared in year zero. Well, what happens? You declare the dividend in year zero, you pay it in year one. Well, that's when the cash went out. So that's going to be what? That's going to be a subtract of the 62,000 for year one, even though the dividend was declared in year zero, you actually didn't pay it until year one. Then they talk about carrying value of convertible preferred stock of Brianna converted to common shares. Well, that's a non-cash event. That is not going to affect cash. Now, you would disclose that on your supplemental disclosure for your statement of cash flows, but it is not one of the items that you would put on the face in calculating cash in this example used by financing activities. Then they have proceeds from the sale of treasury stock. Yeah, that's what your financing department does. They got some treasury stock, they take it and they sell it and the money comes in. So you would go ahead and you would add that 95,000 in, and when you do, you get the correct answer here, which is this 717. Okay. Now, question: what happens if you take 750 and subtract 750 and add 95,000 to it? What do you get? 750 plus 95.
840, 845.
Well, 750 is a subtract, right? And then you add 95. What do you get? We know 750 had to be subtracted. You can't get to the answer without that. So then what happens if you then knew what to do with the treasury stock? So you simply add the 95. What do you get?
655 outflow.
You get a 655 outflow, right? Which is not one of the choices. So then you'd say, okay, well, maybe you're a little unsure what to do with that dividend, but then what happens when you go ahead and you subtract the dividend from that also, which is what you needed to do correctly to answer the question? Now you get one of the choices, don't you?
Yep.
Okay. Okay. Just again, remember, guys, we're talking about test taking technique a little bit more in this discussion tonight. Okay, good. Now, remember, the reason we jumped into the statement of cash flow as part of the final review is because we were going to go ahead and look at what we're supposed to do with statement of cash flows for governmental entities. And I wanted to first talk about it for commercial entities. And remember, we also had a discussion statement of cash flows for not-for-profit. So you're going to get statement of cash flow questions one way or the other. Probably all three, all of the above: not-for-profit, commercial, for-profit, and government. Now, the examiners did ask a task-based simulation sometime back. My understanding that they were asking for you to prepare a statement of cash flows as a task-based simulation for government entity. And this caused students to weep openly, okay, during the exam, because they're like, how am I supposed to do this? Okay. So my advice is that if you get a question like that, pretend that you are preparing a commercial statement of cash flows. And you absolutely are going to have to be ready for that anyway, because you could get a task-based simulation asking you to prepare a statement of cash flows for a commercial entity. But if it's a government proprietary fund, probably an enterprise fund, then what you're going to do is pretend like you're preparing a statement of cash flows for a commercial entity. But when you get to one of these 7 differences, for when you get to one of those areas, do the government thing. Okay, for example, you have to use the direct method. So right away, you'll get points for knowing you have to use the direct method. Okay, what else? A reconciliation of operating income, not net income. So you'd have to pick up your operating revenue minus your operating expenses gives you operating income that would show on the statement of revenues, expenses, and changes in fund net position for your probably your enterprise fund. Don't pick up the change in net position number, which is at the bottom. Pick up that number that's probably somewhere to the middle 3/4 down, which is going to be what? Operating income. You reconcile operating income to cash provided by operations. Points for knowing that there are 4 categories instead of 3. So you still have operating, you still have investing, but now they've taken the financing related activities and broken them into whether they are capital related or non-capital related. Again, points just for knowing that there's 4 categories. Okay, then the order is a little different in that the order of financing and investing is reversed. So first you'll put financing, then you'll put investing, which to me is an annoying difference that I'm not sure how many points they're going to give you for that, but put that on the flashcard. Interest income is part of investing, not operating. And the reason they can do that is because government isn't doing the dysfunctional thing that that we do for commercial. We're not starting with net income, we're starting with what? Operating income. And since interest is a non-operating item, interest what? Interest receipts can properly be put down into the investing, and interest expense are going to be financing. And if it's spending money for, say, an operating loan or interest for an operating loan, let's say, that's non-capital. If it's interest because you purchased some capital item, that's a capital related financing. To me, this is much more mature way of preparing a statement of cash flows by starting with operating income, and everything falls more logically where you would expect it to if you start with operating income instead of net income. And remember, guys, even though you're using the direct method, you still have to provide a reconciliation down there, but instead of the reconciliation being net income, it's operating income. And capital assets purchased are considered financing, not investing. And I think the reason they do that is that when a government buys capital items, they often have received some sort of financing from some source. Okay, so flashcard these differences. Everything else you do is just as though you were preparing a commercial one. So if you get that dreaded statement of cash flows for an enterprise fund, let's say, do not panic. Just calmly pretend like you're preparing one for a commercial enterprise, but you'll have this flashcard of these 7 differences. Okay. Okay, good. Now, it is important and unfortunate that you need to flashcard this whole thing right here. Okay, the nature of things that go into the different categories here, guys. And I'm sorry to tell you that you have to flashcard everything here, because I'm fearful that if you got the statement of cash flows, and what was interesting is they told the candidate the numbers that were associated with each one of these things, all the candidate had to do was put them in the right category. But if you don't have these flashcards, you don't know what category to put these things in, because you probably don't have as much experience with commercial, with government entities as you would commercial. Okay, so let's just look. Operating activities, cash flows from the sale of goods and services, cash outflows to suppliers or employees. That's nothing, that's very similar to commercial right there. Cash inflows from interfund reimbursement and exchanges, including payments in lieu of taxes. Cash transactions not meeting the definition of the other categories, sort of a catch-all. Investing activities, let's look at those. Cash inflows and outflows associated with loans to others. Cash inflows and outflows associated with equity transactions, although I don't think that you really have government entities issuing equity securities, okay, but put it on the flashcard, okay. Cash for our capital related financing, cash flows from issuing debt, cash inflows from capital grants, cash inflows from contribution activity associated with capital grants, cash activity related to special assessments, non-capital related financing, cash flows from issuing debt for non-capital purposes, cash receipts from grants, cash received from property taxes not restricted for capital use, and operating transfers. Okay, now look guys, I can't sit here and explain the logic behind every single one of these, and so it's important that you flashcard these so that if you get a question asking you about the statement of cash flows for, say, an enterprise fund, you at least have a fighting chance to get as many points as possible for some things that might be a little bit, sort of not something that you remember all the time. Okay, all right, good. So you come over and they give you an example of what the statement of cash flows would look like here. Okay, you can look at that on your own. And then what I want to do is just jump you. Okay, we're not going to go through all the financial statements of the fiduciary funds because we already did that in the earlier chapters for government. So let's just come over and let's look at this question related to the statement of cash flows. Okay, I'm telling it to relaunch the poll. And it's not doing it. Let's try it again. Okay, wonderful. We're not going to be able to do the poll anymore tonight because it stopped working. So I'll give you some time to look at that, and then we will go through it together. So there's not going to be any more polls tonight because the poll stopped working. Yeah, can't make it work. Okay, guys, let's go ahead. I am not sure if you had a chance to spend some time with this, but let's go through this. And if I'm looking at this question, I'm going to categorize the things into the categories and do the math on it afterwards. Okay, so we have what? We have operating. We have what? We have non-capital related financing. We have capital related financing, and we have what? We have investing, right? Okay. Now, cash payments from customers are going where?
Operating.
Operating, good, we know that, okay. Then what? Property taxes receipts to subsidize operations. Well, we know that that's what? That's non-capital related financing, because they told us it's a financing unless it's related to capital, which then, if it was restricted for capital, it'd be a capital related financing. Then they tell us what? Special assessment. Well, special assessment, the flashcard said, should be what?
Capital.
Capital related financing. And then the what? The transfer, and the transfer was considered what? Was considered non-capital related financing. And then that's going to be subtract, right? Okay, now when you look at that, you were quickly down to A or B, right? And then when you do the math on the whole thing, that's going to be total 250. This is what? A net of 25,000. And now B's the right answer, right? And then the 50,000, and the investing is 0. Okay.
I have a question on how you know whether or not debt is associated with a capital asset. Like if they just say a general obligation bond, would that be that would be non-capital financing unless they tell you it's funding for the new convention center or something like that, right? In terms of how they do it on the test.
Yeah, right. They'd have to tell you that it was for some sort of capital item, although I'm not sure they would call that a general obligation bond. Maybe they would. But yeah, you'd have to see what was it for. They'd have to tell you what it was for. Property taxes subsidize operations. Although that is considered non-capital related financing, you knew that it wasn't for capital, right? Because they said financing. So it's sort of the opposite of what you were saying there.
Yeah. Okay, thanks.
Okay. Now, when we look at this next module, I'm going to ask you to what I'm going to do is I'm going to go through a couple things here with you on the reconciliation, which we actually did last time. Remember, we worked through this last time where we started with the total governmental fund balances and we reconciled to the net position that was up at the governmental activities. And so that meant that we had to convert a modified accrual number to an accrual number. So we added back the capital assets. We subtracted out any long-term liabilities. We made adjustments for revenue that wouldn't be recognized under modified accrual because it was collected more than 60 days after the year end, where that is not relevant for full accrual at the government-wide level. So that amount would have been recognized as the increase in the net position, right? So we would have had to add that. And then remember, and I think I had to bump around to find the net position of the internal service fund. We add that in because internal service fund is a proprietary fund at the fund level, but it is a governmental activity at the government-wide level. So we went through that last time, okay? Now, we said there are 2 reconciliations though. Not only do you reconcile the fund balance to the net position, but you also have to reconcile the net income numbers. the change in fund balance for your governmental funds to the change in net position reported on your statement of activities. Okay, so when you take a look, remember when we went through the statement of activities, I was making that comment that the student said the government owes the people a refund for that money. That was that change in that position, that sort of net income number, 794,000. So now what we're going to do is we're going to start with the change in that position, and we're going to, we'll start with the change in fund balance, and we'll reconcile to the change in net position. So we're reconciling the income statement. So there's two reconciliations. One reconciles the balance sheet, which we went through this question together last time. The other reconciliation is a reconciliation of the income statements or the operating statements. Let's go through this example together. Okay. Okay, good. You don't need this mnemonic, you know, they get so impressed with their mnemonics. They drive me nuts. Okay, so don't worry about all these mnemonics. I mean, you need flashcards to help you remember what the mnemonics stood for. Okay, so it's kind of gets a little ridiculous, but notice what we have here. We have the change in fund balance, right? And the answer to this question is going to be, well, what's the change in net position reported on the statement of activities for our governmental activities? So what do? Well, we first add in what they tell us about the capital outlay, 250. That's what we spent on capital items. That's an expenditure under fund accounting at the individual fund level, under modified accrual accounting, I should say, at the individual fund level. But at the government-wide level, that's not an expenditure, so you have to add that back, okay? Principal payments on debt. When you pay debt at the governmental fund level, you debit expenditure, don't you, when you pay the principal, okay? For what? For our full accrual accounting at the government-wide level, payment of debt is not an expenditure. You debit the liability, don't you? Not expenditure. Okay, so we have to add that back. Very important, guys, right here. Do not do anything with the interest. The interest is what? The interest is an expenditure both under modified accrual and full accrual. So we ignore that, okay? Proceeds from the issuance of long-term debt. What do? For our governmental funds, we debit cash and credit other financing sources. Other financing sources is like a non-operating income. It's going to increase my life net income number, my change in fund balance. When you issue debt under full accrual accounting, that's a debit to cash and credit to a liability, right? So what do? We have to subtract that proceeds from the long-term debt. We have to subtract that out to get to my accrual number. Okay, good. Then you come over, don't forget your depreciation expense. You would not take depreciation expense at the fund level. You would take it at the government-wide level, right? So we got to subtract out the depreciation. And then they bring in the net income. They're calling it net revenue, whatever. You bring in the net income of the internal service fund. Because what? Because the internal service fund is treated as a proprietary fund at the fund level, so it wouldn't be included with those governmental funds changes in fund balance, but we would want to include it in the change in net position under governmental activities at the government-wide level because we put the internal service fund there. Okay, now this is a very comprehensive example. My prediction is, on a CPA exam, you might get one very simple that picks out a couple of these items and sees if you know what to do with them. I'm not giving you mnemonics on this. I'm not giving you flashcards on this because I really feel that you can logic your way through this. Okay? Question. Okay, now there is, let's do this question and then I'm going to make the statement. Of course, I can't put the poll up. I won't relaunch it. I don't know why. Okay, so let's just go ahead. I'll give you some time to work on this one. Then I'm going to make this comment, and then we're going to turn our attention to some more final review stuff. Okay, guys, I'm giving you a little more time on this one. What do you think? A, B, C, D?
B,
You say B, Captain?
yes.
Okay. Okay, good. Anybody else want to?
Went with B also.
Okay, okay, good. All right, B is the right answer. Now, this is what? This is the change in net position, 2 reconciliations. One reconciles the balance sheet, the other reconciles the operating statement. The change in net position number is reported on the statement of activities, right? So it's that reconciliation. And we start with what? We start with the change in fund balance, which was 500,000. So we just put that down, and then we just need to go through and figure out what to do with these things. So what should we do with the capital outlay of 250,000?
Add.
Good, I add that. But then they tell me it was partially financed by what? Long-term debt proceeds. So what am I going to do with that?
Subtract it.
That I have to subtract, because when we issue debt, that doesn't increase my net position if I'm using full accrual accounting. Good. How about current year depreciation? What do you want to do with that?
Subtract.
Subtract the depreciation, right? Okay, I don't care what the base is. That's a distractor. It doesn't matter what the base is. They gave me the depreciation number. I know I have to subtract it. Okay, good. How about principal payments on debt?
That's an add.
Got to add that. That's an expenditure at the fund level. It's not an expenditure at the government-wide level. Good. And maybe we can look at this one. How about interest payments through October 1st of 30,000? So this is amounts that they paid through October 1st. What should I do with that?
Ignore it.
Ignore it. They are expenditures and expenses at both the fund level and the government-wide level. Good. How about principal payments of 10,000 incurred through December 31st, but not paid, but paid on January 2nd?
You would ignore that.
Okay, good. I'm going to ignore that because, hey, we paid the principal, but we didn't pay it until what? Until the next year. So it didn't affect the change in fund balance. And so I don't need to worry about that. How about interest at payments of 7,500 incurred through December 31st, but not paid?
You subtract that.
I have to subtract that because what? Well, I should have accrued that under full accrual accounting, right? Okay. And then sales tax revenue of 30,000 associated with December 1st, year 1 sales remitted to the state in February and paid to the township in March. So what happens? A lot of assumptions there. I'm assuming we're using 60-day criteria here, which they really should have called that out here. But if you use a 60-day criteria, then for fund accounting, it's not included. For modified accrual accounting, it's not included. But at the government-wide, what? We take the revenue for a derived revenue like sales tax when the underlying transaction takes place. And since it took place in year 1, we need to go ahead and add that 30,000 back in for the income, for the revenue there. And when you do all those pluses and minuses, you get this 527,500. Okay. Again, I don't think you get questions on the exam that are this comprehensive about the reconciliation. There'll probably be 1 or 2 of these, but you should know how to treat them. Okay. Okay, good. Now, you come over and they have this section on deriving. I am going to ask you to watch Garrity's, or I think it's Garrity's video that would take you through to the end of this chapter for this. there had been some kind of concern that maybe the exam would ask you to make the journal entries that would convert modified accrual statements to full accrual statements at the government-wide level. I don't think that that's worth our time together, but there is a video that walks you through this and just a little bit of information behind the scenes. One of the main reasons that they added this to the textbook is because we were asked to do this for a CPE class. And since Tom, who puts together the textbook here, had to do that for the class that we were asked to do for a specific CPE client, he just went ahead and stuck it at the end of this chapter. And so I'm going to ask you to go ahead and look at that, but the chances that you're going to be asked to do something this comprehensive on the exam where you're converting fund financial statements to government-wide statements are highly unlikely. But it's worthwhile to at least watch through that once, and then they give you the reconciliations too. Okay. Okay, I'm going to stop chapter 10 there. And I am going to assume that you don't want a break. And I'm going to, is that a erroneous assumption? I heard somebody.
We'll just run out when we have to.
Okay, I mean, I can give you, you guys want 5 minutes? You can come back at 7:30.
Let's just do it.
Bio break wouldn't, oh, just go forward.
Go ahead, we'll do 4 minutes, okay? And I'm gonna go ahead and get us to the next section, so. We'll do 5 minutes, guys. Go ahead and take a quick break.
I got an assignment at work where I was being requested to look at a school district's financial statement. I was really glad I had this this chapter familiarity with this.
Oh, interesting.
Yeah, it
Yeah,
involves.
you know, when they were talking about the new exam, whatever they're calling it, the CPA evolution, whatever, there was a suggestion that they should get rid of government and not-for-profit. And the overwhelming response of many entities was like, no, we need candidates to know something about this for various reasons. One, we may have there's huge clients that are government entities, and two, the kind of thing that you're talking about, that it is, pervasive in industry. The other problem is that, or not problem, but I think what you're going to see happening in the future, I keep predicting this, it never happens. To me, there should be an opportunity for government and industry to come together and figure out ways to finance things like infrastructure. For example, why should it be all on the government to create an infrastructure so that businesses can do commerce on the roadways? So it could be to the advantage of a company to say, well, look, we'll put in some money for an infrastructure type item. But then what we're going to do is we're going to expect a share of the revenue that's generated from, say, a toll road or something like that. And you can work out a partnership. And so again, I think in the future, that's how they're going to have to do things. Now, if you look at I don't know if you've ever heard of the movie Rollerball. In the movie Rollerball, supposedly all the governments, nations went bankrupt, and only the corporations had money. And there was a whole thing that there had been a series of corporate wars. And then they finally decided to settle their corporate wars through sporting events. And so it's a very interesting movie because you sit there and you're like, okay, this is fiction, but you can definitely, and that movie was put together in the 70s. Now they remade it. Don't watch the remake. Watch the original. There was no reason to remake that movie, but anyway.
Okay. This is not a film appreciation class, however, so let me go ahead and get us back. And now what? What did they do to me? Stop the video for some strange reason? Okay, interesting.
Got your long-term debt thing up though on the screen. I can see that. So
Yeah, for some stupid reason, my video camera stopped working. So I'm just going to turn it off. Okay, I don't think you necessarily need to see me here. As long as you can see my screen, I'm not going to fight it at this late stage. I have no freaking idea other than the fact that it just didn't like my analysis of Rollerball, I guess, but it decided to turn off. So that's okay. Okay. All right. Now, what I'm doing here, guys, is I am picking out a couple of areas that I know are heavy on the exam that we didn't cover when we didn't go through, for example, chapter 5 for long-term debt. I know you're going to get debt questions. We didn't have a chance to go through it together. I do have a video up of the main textbook for this, but I do want to spend a little bit of time going through this with you as part of our little final review session here tonight. Okay, so let's just go ahead and take a look at the issuance of bonds. Okay, and the selling price of a bond is equal to the present value of future cash payments related to the bond, including both interest and principal. And we use the effective rate of interest to calculate what the issue price is of a bond. So we are going to be using present value accounting here. And what will happen is the exam problems will have to give you the present value factors that you need to use to answer that question. But what they like to do is give you different present value factors, and you have to know that you're supposed to use what? You're supposed to use those that are affected with that are consistent with the effective rate of interest, not the face amount of interest that's reported on the face of the bond. Okay. Now, if a bond is issued at a discount, that means that the market rate exceeds the stated rate and the bond will be issued for less than face. If it's a premium bond, that means that the bond coupon rate is more than what the market rate is. And so investors are willing to pay more than face, and they give us the 101, 102. You take the face times 1.01 times 1.02. If it's a discount, you take the face times 0.979899, whatever. Okay. All right. Now with that, let's just go ahead and let's look at what the journal entries look like when you issue a bond for a premium, then you're going to go ahead and the premium will be a credit because you would have issued that bond for more than the face. You always credit bond payable for the face. If you're sitting there and it's a discount bond, then you're going to issue the cash that you get will be less than the face of the bond. And so you'll debit the discount. Now, if bonds are issued in between interest payment dates, okay, the big deal here is that you will always receive more cash for accrued interest. So what you're going to need to do is you're going to have to sit there and figure out, well, how much interest would have accrued between the last interest payment date and the day of issuance. And what you do is when you issue the bond, you collect that extra cash from the bondholders. And then when the regularly scheduled interest payment date comes up, you essentially return that money to them. So you'll be getting more cash on the issue. Okay. Now let's just take a look at the amortization of the premium or discount. And they tell us that the straight line method is okay if it's not materially different from the effective method. Effective method is required for US GAAP. And I always find that irritating because it's like, so what you're telling me is I have to calculate what the interest what the premium or discount amortization would be under the effective method, so that I can compare it to the straight line to see if it's not materially different, and then I can use the straight line if it's not materially different. Meanwhile, I had to calculate what it was under the effective method anyway to be able to do that. Why don't I would just go ahead and report the effective method? But they do allow us the option. Okay. Now, on the CPA exam, they may ask you about the straight line method, but all they're going to do with that straight line method, because it's too easy, they're going to see if you know how premium discount amortization affects one of two items: the carrying amount of the bond or the interest expense. And because they want to see if you know what to do with the premium or discount amortization, they're going to ask you, well, here to calculate it using straight line, but then they want you to do something with that number. Okay. Now, you are, of course, probably going to be asked a question which you'll use the effective method, which we're going to see the process for that here in a second. Okay. And you would take what? The face of the bond times the coupon stated rate. Sometimes they call it the stated rate. Sometimes they may call it the contract rate. I don't see that as much on the CPA exam. Okay, but that's the amount that if they still printed bonds, that would be printed on the face of the bond. And then the actual interest expense is going to be whatever the carrying amount of the bond is times the effective interest rate. That's also sometimes called the market rate. I also see that called the yield. And then the difference between those is the amortization. Okay. Now, let's just look at this. Okay. And I guess you could flashcard this, but really, I think you just need to remember it. Okay. But we have this bond, and the bond is issued for less than face. It's $1 million bond. It's issued for less than face. And so there's going to be a discount, not $1 million, but 100,000. No, it's $1 million. John, $1 million bond, and it's issued for less than face, so it's a discount. Now, to get this interest expense number, we have to pick up what? We have to pick up the market rate of interest, which was 0.05. So they take this 95,000 times the 0.05, and that gives me, as you can see right there, that gives me the what? That gives me the interest expense now using the market rate the effective rate of interest. Then I'm going to compare that to the cash interest, and the cash interest is going to be what? The million times the 4% or 40,000. That difference is the amount of discount that will be amortized. And then what I do is I take that 7,500 and I add it to the previous carrying value. So amortization of discount increases the carrying value of the bond, right? Okay. And when I do, I go ahead and that increases the carrying value. And if I want to get the interest, the effective interest for the next period, I go ahead now and I multiply that for the next 6-month period times the 0.05, 957,500. That gives me this number, 47,875. The 40,000 won't change. That's the contract stated rate. That's not going to change. But now I have this discount amortization, and I go ahead and I add that to the previous carrying value, and that gives me the new carrying value. And I go ahead and I would multiply that times 0.05 to figure out the interest for the next period. Now, there have been task-based simulations which might make you go through, say, 2 or 3 years of this, and you will literally have to sit there and fill out a table doing this amortization of a discount or a premium. Okay. Now, what I want you to do is create a flashcard right here. Okay. And I'm just going to write it in. What effect does discount amortization have on carrying value of bonds and interest expense? And I'm going to read that back to you. What effect does discount amortization have on carrying value of bonds and interest expense? What effect does discount amortization have on carrying value of bonds and interest expense? Answer is one word. It does what?
Increase.
Increases. Good. Okay, so now if you get a question and the examiners are telling you to amortize the, in this example, discount using straight line, they're not going to just stop and say, so what's the, amortization? That's too easy. They'll say, what is the interest expense? And you know that you have to do what? You know that you have to take the cash interest and add the discount amortization to that to get the interest expense. Or if they're sitting there and they're saying, well, what would be the new carrying value of the bond? Again, you add the discount amortization to get the new carrying value, right? Or if they ask you to do it this way, you go through, if they ask you for the effective method, you go through this process. Okay, good. Let's do another flashcard. What effect does premium amortization have on, and again, I'm going to ask you the same two elements, interest expense, and I wrote them the opposite than I did over there, and what? Carrying value. Of bond. I'll read that to you. What effect does premium now amortization have on, and it's actually about the same two elements, interest expense and carrying value of bond. What do you think?
Decrease.
Decrease, right? So again, I'm having you make these flashcards, guys, so that when you get a question and they give you the they may even give you the amortization, and then they'll have you, what is the cash? They'll tell you the cash interest. And if it's a premium amortization, you add it to the cash interest. If it's a discount amortization, you subtract it. They may give you the carrying value. They may give you the amortization. And I want you to be able to know what to do with it quickly to turn that into a quick, correct answer. Okay, question. Okay, good. Let's go ahead and let's take a look at a couple of bond questions then. Oh, I can't do the poll, so I'll just give you time to work on that. Okay. What do you think?
I want to say C, 3.
Okay. Any other thoughts?
I'm going to say 4.
Okay.
I also think
Anybody want to break the tie? Huh?
I also think it's 4.
4. Okay. Okay, good. Yeah, the answer is 4, but let's go through this together. Okay. Now, they come in and they say that they issued bond for $1 million, 9%, 10-year bond to yield 8%. So what's going to happen? Well, if it's a 9% bond and it's going to yield 8%, I know that this bond has to issue for what? For more than face, right? People are willing to pay a premium on this. So I know it's not this, and I know it's not face. The only way it would be face is if the yield rate and the stated rate, whatever, the 9% were the same, right? But they're not. So I can immediately eliminate 2 choices here, right? With me so far? So now my job is to pick up the right factors, and I have to discount the face, which is the million, and I have to pick up the right factor here. And I also have to do what? I have to figure out the interest payments and discount those. And the interest payments are going to be 1 million times what? Times the 0.09. 1 million times 0.09 is 90,000, guys. Am I doing my math right here?
Mhm. Yep.
Okay, so that's the principal. Got to discount that. Got to discount the interest, and the interest is 90,000. Okay, now even though I calculated the interest using that stated rate, to discount, I have to use what? The 8%. So they tell me that the present value of a dollar at 8% for 10 years is 0.4632. And so since the interest, the face is a one-time payment, I just use the present value of the dollar factor. The interest is what? At 8% is a stream of payments. It's an annuity, isn't it? So I have to take the present value of the annuity factor again at the market rate, not the coupon rate of 6.7101. So even though you use both rates here, you got to know that to discount, you use the market, the effective rate. And when I do the math on those two things, I get 603,909. Just doing the math on that. Am I doing my math right? Oops, I got that backwards. It's what? That's for the interest. For the principal, it's
463,200.
463,200. Thank you. And for the interest, that's the what? 603.
3,909.
909. Good. And when I add those two numbers together, I get the 1,067,109.
Yeah.
Okay. I don't know how that other number comes up. All right, guys, let's try this one, and then we're going to talk about what our plans are going forward here. Okay, but let's just go ahead and try this next question. And I can't put the poll up anyway, so. I'm giving you a little time with this one. This is one of those kind of, you got to go through kind of a couple iterations here with this one. So I'm going to give you a little time here. Okay, guys, let's go ahead and take a look at this one. And they want to know what is the unamortized bond discount should be for a bond that was issued in year one, and they want to know by year three. So I look at this and I'm like, well, if the bond discount is starting out at 61,000, I know that that discount is going to do what? That discount is going to decrease over the years so that the carrying value of the bond can come up, right? Okay. So I look at the choices, and sometimes you look at choices and they'll have the number bigger than the original discount. You could immediately eliminate those. Here, no, all the numbers are smaller, right? So I'm going to have to work on this. Okay. So I sit there and I say, okay, I'm going to amortize this discount. And they tell me that it was $1 million bond. And they tell me that it was what? A 9% bond. So it was issued to yield 9%. That's 90,000. But I need to do what? I need to take the carrying amount of the bond and I need to use the yield rate, don't I? So I look at that as 939,000, and I multiply that by 10%, and that gives me what? 93,900. Am I doing my math right?
Yep.
Okay. Now I look at the difference between those, and that difference is 3,900. And as we said on the flashcard, what's going to happen is that's going to reduce the discount so that the carrying value can come up, right? Okay, so I subtract that 3,900 from the 61,000. And when I do, that becomes now 57,100. Okay, now that's at what? That's at the end of year 2. Isn't it? Well, I'm not there yet because I have to get to the end of year 3, right? So now I start looking to say, okay, well, I guess I got to amortize now another year of the discount. So what am I going to do? Now I'm going to take the 939,000, which is what they originally issued it for. And I'm going to do what? I'm going to add the amount of discount amortization to that, which was what?
3,900.
3,900. That brings that carrying value up for year 3 now at 942,900. I multiply that by what? The effective rate of interest. That gives me 94,290. And what? And the 90,000 doesn't change. That's going to be paid out every interest payment date, isn't it? So I still need that 90,000. So I take that 90,000, that amount won't change. And that gives me an amortization of 4,290. I take that what? I take that 57,000, and now I subtract the amount of discount amortization now from year 3, 4,290, and that gets me the correct answer here at 52,810.
Yep.
Okay, so a question like that, you know, will take you a little longer. It's not conceptually hard, but you do have to kind of keep track of what you're doing and go through and, you know, make sure you know what years you're in. Oh, and if this bond had an annual interest payment date, be careful. If bonds have what? Have 2 interest payment dates, you have to what? You have to double the number of periods that you're discounting, and you have to do what? You have to take the interest rate and use half, right, for the interest rate. And many, many bonds contemplated questions on the exam, bond questions on the exam are semi-annual bonds, so meaning they pay interest twice a year. Question? Okay, guys, we're pretty much up on 8 o'clock. So here's what I want to do. For next time, next week, a week from tonight, we were on Wednesdays, right? I'm going to ask you, we're going to treat this as a group office hour. So for the 29th, starting at 5 o'clock, I will be here and I will answer questions that you have submitted to me about problems in the homework. So in other words, you need to send to me, hey, John, MCQ 09261, can you go over that? And I will be prepared to go over the questions that you send me, and you need to send those to me by, I'm going to say Monday. Send me those questions by Monday so I can look at them and then I can respond to them during our get together on the 29th. If you don't send me any questions, I'm not coming. Question?
Yeah, maybe did you cover overall test taking strategy? And you mentioned time was a factor. Is that worse than it was, say, for BEC in terms of being able to complete the test, get all the answers in the time that's allotted?
If I had to rank the exams in terms of time pressure, I would say FAR is the worst. FAR is the one, I mean, you can see, look at this question alone, so FAR is the worst, then reg, then BEC. It is my opinion that audit really, my audit students really don't have problems with time, I don't think, on audit. Okay. I have the in there, I talk about what to do on exam date and stuff on the how to study file. So that's still there. I've gone through that a couple times now. There was something I wanted to say there. Oh, order your textbook for audit and BEC. If you're doing audit and BEC with me next, order those textbooks today or tomorrow. Do it first thing tomorrow.
Yeah, be careful about the drop-down menu, because if you don't make sure you've got 4.1, they will send you the old version.
Okay. Yeah, order 4.1. I think we had talked about that, but I was going to find out in the answer.
We did, but I was in a rush and I quickly clicked it, and I think it was before you mentioned it, and I got the wrong version. So I called customer service and they're supposed to be sending me the right version, but that'll save you a call.
Okay. It's not a huge difference. And I was a little annoyed that they came out with a new version right on top of having issued a new version, or maybe I'm just getting old and time's going faster than I think it is. I don't know, but it just seemed really fast for them to come out with another version on top of a version. But yeah, order 4.1, please. Time does go faster when you get older, so maybe that is what it is. I told my dad one time, man, time is going fast. And he says, you know when time's really going to go fast? And I said, no, after I die, is what he said. And now I hear my dad saying, oh, okay, I get it. So maybe that's what's going on. So, okay.
All right, thank
Thank
you.
you. Thank you very much for taking your personal time to do this.
Yeah.
Sure. No, I guess it's personal time, but I feel like, we got a little behind. And so I think it's worth our while to spend this additional time together. And I appreciate you guys doing the same. Oh, and don't forget, Merry whatever, happy holidays, whatever, ho, 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 and mistletoe and all that kind of stuff. We will see you on the 29th, assuming you send me questions. If you don't send me questions, I'm not doing it.
Okay,
All right,
great.
thank
Happy
you.
holidays.
Okay, guys. And that'll be fine, by the way. I won't be crying. I'll be crying into my gin and tonic on the 29th. So,
Can we send you, if it's not specifically an MCQ, but it's like maybe some questions, some places where we get mixed up, and if you can give us some pointers on how not to get mixed up,
Yeah.
that would
Yeah,
be.
if you want to do it that way, that's fine too. If you want to say, hey, every time I look at a bond question, I do this instead of that or something. Yeah.
Yeah, I find that there's some patterns to my mistakes.
Yeah.
So,
No, that's good to find the pattern of your mistakes so that you can, that's like going to the doctor and they're taking a test and they're saying, well, yeah, you got this problem, right? So yeah, we can address that.
okay, all right.
Okay. All right, guys. Happy holidays. Enjoy a little time with your family, but also don't forget to wrap yourself a present of your flashcards and open those and look at them too. Okay, guys.
Take care. Thank you.
Have a good holiday. Bye.